Good afternoon, ladies and gentlemen, and thank you for joining us for the next instalment in the Admiral Markets Trading Spotlight webinar series. My name's Paul, and we are here today to talk about the fascinating subject of Brexit, and in particular, where do we stand with Brexit at this moment? So I have to caveat this, that here we are. This is Monday, 21st of December, and the real caveat is just that this is it's an ongoing operation as we speak. It's the part of the negotiations that are happening, and so things could change and could change rapidly, and we've seen that all the way through this particular Brexit experience, that things can change on a sort of in a moment and completely go 180. Okay, so what we're going to be talking about is where do we stand with Brexit as of today, and we'll be talking about what the possibilities and what the opportunities are and what we think may happen over the next couple of weeks and months. But we also have to realize that that could change quite considerably and quite drastically, even as we speak. So if you're here joining us today, okay, thanks for joining us. All right, it's we really do appreciate it. We realise here at Admiral Markets that 2020 has been a rather tumultuous year, hasn't it? And we hope that you're all safe and well, and so we thank you for joining us for our particular session. I also recognise that there will be people here in this room who have a wide range of opinions on Brexit. Okay, there'll be some people who love it, some people who absolutely hate it, and that's fine. That's what makes a market, after all. So it'd be fantastic to hear if you're in the chat box here joining us. Just put in what your own thoughts are, what you think might actually particularly happen, or if you're watching this later on the YouTube on demand, okay, channel, is that if you've got thoughts, okay, or particular considerations, please put them in. Okay, we always answer our comments. If you think you find it useful or it's helped you, please give us a like. That all helps with YouTube these days, but I'm sure you already know that yourselves. So Ronald says here, I've got no opinion. Well, that's all right, Ronald. Maybe by the end of this session, you might do one way or another. That's absolutely fine. But if other people I recognise will have particularly passionate subject, and it's something we can talk about and have a discussion, okay? And we'll look at exactly where we stand as of today, but also how the kind of the charts and the markets are reflecting that. And so, in particular, we're going to talk about that latest situation. What is the latest situation when it comes to Brexit? Okay, how is that affecting people today, and what will it do from the next couple of weeks? How has that affected the relevant markets? Well, what we'll do is we're going to look through some slides here, and then at the end of it, what we're going to do is switch across to the charts, because we're traders, and ultimately we want to see how does it play out in the actual charts itself. And with that, what sort of opportunities does this offer us? Okay, as always, these things, it's a mixture of threat and opportunity, and it's just to our sort of our role as traders to be able to sort of mitigate the risk, navigate through the kind of riskier opportunities, and see where opportunities may lie for us as traders. For those who don't know me, my name's Paul. I've traded for many years. Okay, primarily I trade FX indices, commodities, in particular, sort of longer term trading. I'm a bit of a trend trader and a kind of mean reversion and reversal trader for the sort of shorter time frames in terms of intraday trading. And today, here we are, Admiral Markets. Okay, they provide a wide range of financial instruments and that provide a real global reach. They're licensed and regulated across a wide range of regulatory environments, providing competitive spreads on the most popular trading products and allowing you the opportunity to engage with markets using both MT4 and MT5. And if you've got any questions about Admiral Markets, please get in touch with your account representative, and they'll be very happy to help and guide you. But, ladies and gentlemen, what we want to talk about is where do we stand with Brexit? And I appreciate we've got a wide range of people here, and and Ronald there says he's got no opinion. Maybe you have an opinion. Maybe you're for it. Maybe you're against it. As always, it's fantastic to kind of to hear that. Okay, it's realistically that all those different opinions are what make a market. But as the slide says, on the 23rd of June 2016. The UK voted in a referendum to leave the European Union. And since then, okay, we've had kind of 4 years of negotiations, shenanigans, political skullduggery, and U-turns, to the extent that lots of people would be rather kind of tired of the whole event. Were it not for the COVID crisis, this final chapter of the Brexit scenario would probably be the major geopolitical event for us to deal with in 2021. But, as we write and present this, here we are, 21st December 2020. We'll take a look at where we presently stand with Brexit and discuss the impact it might have upon markets. And that's what we're particularly kind of wanted to take a look at. I caveat it that I'm not a legal expert. Okay, I'm not an expert on the finer details of the kind of Brexit negotiations. This is really just about having a bit of a broad brush, bringing people up to date with where we stand at the moment. But more interestingly for us, where does it look when we're looking across actual markets? How does it reflect upon that as particular traders? And ultimately, that's it. You could be for it or you could be against it, but actually, ultimately, as traders, you're looking for, where's the opportunity? What's what risks do we have to mitigate, and what kind of opportunities may present for us? So, with that in mind, where do we stand at the moment? Okay, what have we seen? Okay, because I appreciate that, I here, based in the UK, and a lot of the people based in Europe, but the people joining us from across the globe, all right? Admiral Markets has a real global reach, and so some people may not understand the entire Brexit saga as well or as in depth, okay, or may not really fully understand how we've got to this particular point at the in the proceedings. So as we said earlier, is that the UK voted to leave in a referendum on the 23rd of June 2016, which seems like a lifetime. It was just over 4 years ago, but it seems like an absolute lifetime ago. What we've seen here, and I would admit, I would probably give this a bit of a UK aspect, because that's where I'm from, that's where I live. Okay, so that's the kind of the news of it, is the kind of the UK news aspect of it. But in that time, we've seen the fall of two prime ministers, David Cameron, who resigned pretty much on the morning of the vote, and once his replacement had been appointed, Theresa May, she didn't last terribly long. She sort of had to resign as well, and then was replaced by Boris Johnson, the present prime minister. We've seen also two general elections in the UK, which were fought as what might be deemed as Brexit general elections. We had one in 2017 where Theresa May sort of, was the winner, which basically she lost a great deal of her credibility, her kudos, her seats. And then again in 2019, where Boris Johnson actually won an 80-seat majority, and that allowed him to basically to drive through the kind of the sort of Brexit bills within the UK. We've had multiple internal votes in the UK in both the kind of the higher and the lower sort of houses of both the House of Commons and the House of Lords. We've had, as I said, Boris Johnson's become the prime minister, and then what happened with that is that the kind of the bill was ratified, passed through Parliament, and actually Brexit actually occurred when the UK left the European Union on the 31st of January 2020 this year. So actually Brexit has occurred. Okay, the UK left, but now what we have was, as part of that, was a transition period to arrange a trade deal, the specifics of the trade deal, and that transition period that runs out 10 days from now on the 31st of December 2020. And this is where it starts to become interesting and becomes relevant to where we are here on the 21st of December 2020, and what we could see actually happening over the next few days, weeks, and months. So just as an aside, as I said, because I appreciate we have a global audience, people might want to understand, well, actually, what changes, all right, from the 1st of January 2021? What actually happens? Well, whether there's a deal or there's no deal, there are going to be some immediate changes from the 1st of January 21, and I'm just going to point out some of the major ones. There's actually there's a whole host of changes, but people planning to live, work, or retire between the UK and the EU will no longer be automatically allowed to do so. Okay, one of the elements of the European Union was a freedom of movement. Okay, so that will actually cease. Okay, now people think that actually means that there will of course be no immigration. Okay, from the EU to the UK, which is where the vast majority of it has occurred. There's been a disparate kind of relationship there between the kind of number of people in the UK wanting to live in Europe and actually the number of Europeans wanting to live in the UK. But what will happen is that the UK will in future apply a points-based immigration system to EU citizens. So, things for actually for holidays, etc., that will be fine, okay, as it was before. But if you are planning to sort of live or work or retire there in either of the blocks, let's say the UK or the European Union, that will no longer be available, and it will actually be on a points-based immigration system. And for the UK, that's what they will be rolling out for everybody. So actually, the European Union will no longer have premier or preferred status. They will have a points-based immigration system based on pretty much like whether you're coming from the EU, from India, from Australia, from the Far East, from America, etc. The UK will also no longer make such big annual payments towards the EU's budget, and that number can differ depending on the years, depending on the kind of the stats you look at. But as a rule of thumb, that number can be anywhere between about 9 to 14 billion pounds a year that the UK pays in towards the European Union, and that will no longer happen. And I believe that will taper. What will happen is that will actually taper down over the next couple of years. And also, businesses trading with the EU or businesses in the EU trading with the UK will face more paperwork, and this is the kind of the sort of the main point of the rub, okay, in terms of the discussions for the transition deal. Not unsurprisingly, businesses want as business to be as frictionless as possible, and certainly within the moment in terms of the single market, okay, and the customs union, that was part of that the UK was able to sort of do that, and equally European countries, EU countries, being able to their trade and importing into exporting into the UK, and invariably that is now trying to understand, okay, the nuances of that. Now, as I said, I'm a trader. I'm not a trade specialist. Okay, I am a trader. Okay, I'm not a legal specialist. There will be people who can provide much more in-depth detail there. And in this present climate, there is plenty, okay, of material there for you able to read it. What we want to understand is, okay, are they able to sort of to get a deal in place that basically covers the vast majority of that allows kind of business to carry on, and in which case that will have an impact upon financial markets. Will there be a deal, or won't there be a deal, or will there be some sort of fudged compromise in between? And that's what we're looking at. So what we've had is we've been in this negotiation for you might say for 4.5 years, but particularly in terms of the transition negotiation, in terms of the trade deal, that particularly has happened from this year, 2020, from when we left on the 31st of January. And a lot of it can depend upon who you read, what kind of media you're exposed to. Some of the media says that that actually it's been very poor negotiations. Others have said that invariably that actually negotiation is by and large been pretty good. But there are some particular sticking points, and that's what we're going to focus on, because that is what we're actually sort of looking at. What impact they will have, and even impacts on this particular presentation. This presentation, I had to do the slides yesterday rather than normally I do it 4 to 5 weeks. So in front of the reason being is because the situation is changing. We've had a series of deadlines by which the deal would or would not be created, and that has actually sort of kind of just drifted on and drifted on and drifted on and drifted on. And as I said and caveat at the start, I'm talking at you here on the afternoon, 21st December. 2 hours from now, it could all be done and things change. So I ask your forgiveness and indulgence. If things change rapidly over the next day or two. That is the kind of situation we're in. That's the kind of end game that we are getting towards. But in particular, there have been 3 kind of sticking points that have consistently sort of caused, let's call it abrasion. They've caused friction between both of the blocks, between both of the negotiation teams. What we're particularly looking at, the 3 ones are fishing, a level playing field, and resolving disputes. So why don't we have take a look at them, because that I think will help understand people who perhaps are not either living in the EU or the UK, people who are globally living, understanding, well, why hasn't the deal been done yet? What's preventing these guys from actually just getting a deal done and getting on with it? Because that's most business people, that's what they want. So the first one is fishing. Okay, so as part of Brexit, the UK becomes an independent coastal state outside the EU's Common Fisheries Policy, the CFP. At present, they will revert to UK waters. However, the EU wants to continue fishing in them, and they catch around about £600 million worth of fish in those waters every year. Okay, so it's it's interesting that the vast majority of the fishing done in EU waters is done by EU ships, okay, primarily from France, Spain, but also Belgium, Holland, etc., and the likes, okay. And the dispute is not just about access, but about shares of fishing quotas as well, okay. And that's the kind of something that has been a constant sort of, let's say, thorn in the side of the negotiations. And also there's been talking about a status quo period in terms of, a bit of a taper period, a bit of a period for adjustment. The EU wants 8 years. The UK is offering 3 years. Now, this has become, actually, a very hotly contested part of the negotiation, even though as actually part of the sort of trade in terms of, the significance in terms of the trade done between the two blocks, it is actually relatively insignificant if you're just looking at it on broad numbers. But what you have to recognise is that there has been the decline of the UK fishing market, or the kind of UK ports, and fishing industry, because invariably most of it was taken by the EU. And kind of what people don't realise or recognise, and these are the sort of things that temper negotiations, is that one of the main senior members of the UK cabinet is Michael Gove, and he comes from a fishing family in the northeast of Scotland, and his family struggled after basically the initial sort of deal with the EU was done. So it might sound glib or facetious, but actually things like this, when it comes to high level, high powered negotiations, elements like that, they stick. We are human beings. We all have the human condition. These elements all actually sort of, have an impact upon our beliefs. They have an impact upon how we see the world. We have an impact upon the decisions and choices that we make. So it's fishing is a very contentious issue, and particularly certainly, for sort of France and Spain and other countries, they are particularly keen to invariably keep fishing in UK waters, because it's been very, very successful and prosperous for them. And so the question is, and as I said, once again, I'm not a trade specialist. It's a case about understanding: is there a possibility for a deal to be done here, to be getting around? Because even that the UK, the UK fishing industry, the vast majority of what we make is actually exported elsewhere. You then also have other countries who are particularly sort of trying to, let's say, stick an oar in the water. So countries like Japan, South Korea, other nations have said they would actually happily look to pay to be able to fish in UK waters. So the kind of, as I said, it's a rather contentious issue, and it'll be interesting to see what kind of deal is done, if at all. The next sticking point that has continued to be contentious is what's called a level playing field. All right. And this is all about rules on fair competitions for business now and in the future. These are measures to ensure that business on one side don't have an unfair advantage over their competitors on the others. And the EU is worried that the UK will cut regulation and be more competitive than the EU. And that's something we will come back to. And the EU wants the UK to stay closely aligned with EU rights, whereas the UK say the whole point of Brexit was to break free of such rules. And the challenge is who decides on penalties if there is a break, which we'll come on to in point 3. And this has been about that. The European Union is pretty much set up to effectively to look after the rights of businesses, and workers within the European Union, and invariably their standards. For you to be able to trade in and out of it, you need to be aligned with their particular standards. What the European Union was concerned is that if the UK breaks free, of such rules, well, then the UK will be able to actually sort of set their own standards, which the EU will say that would be lower than their own. Whereas actually, if you look at the history of it, actually very often UK rules and standards have been higher than EU standards. So I think it's unlikely that we're going to see effectively a quick slashing in terms of standards and qualities within the UK. But one other side of it is effectively in terms of regulation, and also could be future in terms of taxes, in terms of definitely in terms of things like corporation taxes. It's basically the kind of the European Union has been concerned that the UK would turn itself into, as they describe, Singapore on Thames, where invariably there would be a very, very low regulatory environment especially for financial services companies, and invariably that they see as particularly competition. So the EU wants the UK to stay very, very closely aligned to EU rules and regulations. Whereas the UK says, well, part of the reason for it is because we want to break away from that. We don't wish to sort of be aligned. And if we stay aligned, well, then it's not really Brexit at all. And so this has been, a kind of a football that has been kicked back and forth between both sides, and it's a case of recognizing, can there actually be something achieved on that? And we understand from the kind of rumors and stuff we hear from the media that there are elements that are being basically arranged and organized, but it has been just a bone of contention. And as it says there, the challenge is who decides on penalties if one side particularly breaks those the level playing field rules that they're working towards. And as I said, and that comes down to that kind of final one about resolving disputes. Now, what we're talking about here is this is about how the rules of the Brexit trade deal will be enforced and what actually happens if one side breaks them. Okay. The European Union, wants strong and independent arbitration, which would probably be decided by the European Court of Justice, or the European Court of Justice would take the lead on terms of that independent arbitration. Not unsurprisingly, the UK naturally feels that would be unfair and a rather biased scenario. Okay, if the EU wants to be able to effectively issue penalties and have those penalties basically decided upon by their own Court of Justice, whereas the UK is kind of rather indifferent to that and rather would like a much more separate and properly independent arbitration there, because they feel that the European Union want to use the European Court of Justice would be is unlikely to be unbiased and unfair, as we have seen in previous cases with the ECJ. So that is one of the disputes. Okay, one of the kind of three sticking points about why a particular trade deal hasn't been completed by now, and why even today the negotiating parties and the main leaders are actually still talking and chatting away and trying to sort of overcome or find a way to get around these particular elements. So that's all well and good, but the question becomes, as traders, will a deal be done? All right, will a deal be done? And it's fair to say the teams are leaving it late. However, it's possible that a basic trade deal will be done. Okay, neither side wants to be seen to be the one that causes the negotiations to fail. So both sides will need to make concessions, and there is also the intelligence and security cooperation as well, which is very important and very often not understood. And most people would agree that a basic deal is better than no deal. If there is no deal, well, then invariably the UK will just revert to trading with the EU using WTO, basically rules and regulations. But most people would feel that a basic deal is better than no deal. But it is also true is that that after the trade deal is done, then there is the conversations about intelligence and security cooperation, and that becomes enormously key. And this is one where invariably that has an impact upon all of our lives as well on an everyday, especially within the world we live in at the moment, especially with what we've seen in terms of some of the sort of terrorist incidents we've seen across Europe over the last few years. The ability for intelligence and security services to be able to cooperate across that broad spectrum is actually a key element of entirely kind of Western European safety, and so that's an element of conversation that's going to need to be had, because invariably it's one of the UK's strong points, but also working as a team, as a European team, means that it's a better, stronger kind of a security net for everybody. But it is true that neither side really wants to be seen the one that pulls the rug on the negotiations, or to be the one that's blamed for causing negotiations to fail. So yes, they are leaving it late, and yes, there will undoubtedly be conversations all the way up to the very end, I suspect, which is kind of what I suggested maybe 4 years ago would happen. But I do understand that, my view would be that they are trying to negotiate those final kind of 3 sticking points to get a basic deal done of some port. And then I think what will happen is there'll be a basic deal, and then there would be the details would be ironed out over the next year or two. But a general memorandum of understanding or a deal in place would happen, because that would give an element of certainty to businesses on both sides. Okay, this is not also about the UK exporting to Europe, but it's also about Europe exporting to the UK. And there is a huge imbalance there. Okay, there's an absolute massive imbalance there in terms of the amount of business that comes into the UK as opposed to the amount of business that the UK sort of exports to Europe. So it is in both parties' interest for some sort of trade deal to be done. So, as I said, both sides would like a deal of sorts, if for different reasons. And, no deal would have an impact, but as I said, may hurt the EU more initially, simply because of the amount that they export to the UK. So, that would, especially if you look at things like, German automotive, engineering companies, okay, they are not unsurprisingly very keen for a deal to be done, because invariably there might be something like they sort of talk about maybe 700,000 jobs are on the line should a deal not be done, and invariably tariffs are then placed between people buying cars or other goods from the EU. But that also, as traders, we're looking at, well, there are certain markets that are sensitive to Brexit, and that's what we're going to look at in, let's call it like the second part of this session today. We'll have a look at, what are the kind of markets that are sensitive to Brexit? Can we take anything from it? Can we actually look at those and get an idea and an understanding of, of what's going on just from what price is telling us? So if you're looking at charts like the euro sterling, pound dollar, pound Swiss, euro yen, and the indices of the DAX, the FTSE and the CAC, could that give us an indication of what would actually happen? And that's what we'll go and have a look at now, ladies and gentlemen. So, in conclusions for the slides is that, the UK voted to leave the EU back in 2016. After many false starts, it officially left on the 31st of January 2020, and there is now this transition period until the 31st December 2020 to establish a trade deal. The three kind of sort of striking points are fishing and access, quotas, level playing field, and dispute resolution arbitration. And also that, regardless of whether a deal is agreed or not, there will be a change in life, okay, on the 1st of January 2021 in terms of people who want to either live, work, or retire in either the UK and EU blocks. So let's have a little check out on the effect on relevant markets. So Carol says, may I know Brexit affects which currency trading pairs? Yep, that's what we've just looked at, and that's what we'll have a look at now, Carol. So if you'll just bear with us a moment, what we'll do is, I'll just do the last couple of slides, and then we'll switch across and have a look at some charts. With traders, that's what we'll be able to do. And don't forget to join us next time when my colleague Marcus is going to talk about, well, what do you need to learn about the major currency pairs, including understanding the major currency pairs in Forex trading, how to read currency pairs, liquidity and trading major currency pairs. That's on Wednesday, December 23rd, 2 o'clock London time. Check your inbox for the webinar link or head over to the Admiral Markets website to register for the live webinars. And you'll find that there's actually lots of analysis and education resources on the admiralmarkets.com website. And if you want to contact us, well, you can do hello@admiralmarkets.com. You'll find this and all of the other videos on the youtube.com/Admiral Markets, facebook.com/Admiral Markets Global. So hopefully that's just giving you a little bit of insight into where we stand today, okay, in terms of the Brexit. As I said, I've caveated that all the way through. That could change an hour after this this presentation is done, because we are in the end game of what is occurring, and so things will change, and there will be flips and flops all over the place over the next 10 days, I suspect. But what we want to do is we want to have a look at, well, what are the charts telling us, okay? What is the charts giving us any insight into what is actually occurring, and can we use that to help us do that? So if you'll bear with me a moment, what we'll do is we'll switch across to the Admiral Markets MetaTrader platform, and we'll have a little look and talk through there. So just bear with us one moment, we'll switch across. Okay, so I'm hoping that you can all see and hear me. Again, hope you can see this is the Admiral Markets MT4 platform. Plowman says, I just want to be able to watch European English Premier League games on TV and to be able to travel free for live matches when we can. That's fair enough. We have to work out which team Plowman supports. Okay, so it's he'll be able to do that. But even that will have an impact. Okay, in terms of there are an awful lot of European players who are playing in the European in the English Premier League, and there will now be there will be more rules based upon players being able to sort of trade between clubs both in the UK and Europe. That will have a knock-on impact. And as even Plowman says, if he wants to be able to come across and watch matches, and I go to matches and stuff, and you can see that there are supporters clubs. I'm a Manchester United fan, but even when I go to Old Trafford, there are supporters clubs from Ireland, from Norway, from Germany, from Poland, from Italy, etc. And that will have an impact. It will still occur, but there might just be a bit of paperwork that is required to be able to do that. In the same way that when teams go to play in Europe, that will continue. There will undoubtedly be a few little changes, but I think ultimately things like that will happen. But it just shows you how that Brexit deal will filter into every kind of aspect of our lives. But what we want to look at is, well, how's it going to affect trading, Paul? Right? What can we look at? And this is an MT4 profile I have for sterling. I have one for euro. We can have a look at, but ideally, what we're looking at is the kind of main currency pair that it's going to impact is the euro against the British pound. So let's have a little look at that chart. We're going to have a little bigger picture to begin with. Here we go. So here we go. So this is the monthly. This is the monthly chart here. Okay. And what we can see was that sort of early in the kind of in the tweenies, okay, in terms of 2012, 2014, we saw the euro weakening and basically the effectively the sterling strengthening up until there was a decision in 2015 to have the kind of referendum. And then what we can see is we were traveling around here. But here's the big jump we had here, okay, from once the announcement was made on 23rd of June 2016, and what we're looking at is since that time, what we can see is that price has just got into a bit of a big block there, hasn't it? So let's just draw in a bit of a hopefully you can see that we've just literally for effectively the last 4 years we've kind of been in a bit of a range there between 83 to about 93. So it's been in a bit of a 1,000 pip range there for the best part of 4 years. Okay, for the best part of 4 years. Hopefully you can see that on the monthly chart. And if we go down to the weekly chart, okay, and the weekly chart, well, you can see there have been some particularly big swings there, haven't there, over the last couple of years. And a lot of that has come to do with things like changes of prime minister. Okay, we had the change of prime minister in the UK. We've also had elements like parts of elements of agreements were put in place during those negotiations when we had things like Boris Johnson becoming Prime Minister in the UK, who was a part of the Brexit campaign when he won a big commandeering majority in the sort of election of 2019. That was him, and we can see as there have been swings to and fro, which have made trading the euro sterling on let's say on a longer term basis, on a swing on a longer term basis, it's somewhat challenging at times, okay, because there has we've just effectively swung back and forth there, and you can see for that. And and if you've caught some of these swings, well then congratulations, well done to you. But equally, those swings can change like that, literally change overnight, because whether there's a new announcement or whether there's a disagreement, okay, or whether it just literally effectively is flip-flopped and swing before. So, but as I said, it has just continued to be in that range between about 83 and 93. Okay, that's where we've traded. And if we look here, if I'm just looking here, this is the weekly chart. And what we had was at the kind of at the sort of this is where the UK left here, okay, at the sort of end of January, and what we saw was a real strong move there, okay, towards the euro and against the sterling. So sterling weakened and euro strengthened, okay, and we pushed our way up, and that was also run as part when we had a bit of the COVID crisis. But you have to think about this, and let's just go out to the monthly chart again, okay. You have to think about the kind of the bigger idea of this. Now, if if there is going to be issues between imports and exports, what would you particularly want to do? Okay, if you're a let's say you're a German car manufacturer, does it suit you, okay, to have your German cars becoming more expensive? So as price, which was at one point as low of like 70, okay, up to effectively 90, where we sort of like 2,000 pip move, that adds a cost to you trying to export or sell your car into UK markets. Equally, if you're a UK company wanting to basically sell stuff into Europe and you now have tariffs in place, well, you want to actually basically still remain competitive. And so invariably having a weaker sterling against a stronger euro, that can actually help offset an element of it. So, it's interesting that, we've seen the euro sort of, rallying up, and the euro, for the most part, has stayed above about 85. Okay, it's been 85 and 90. But the question would be, is that does that actually who does that help in terms of the industries? So, does a weaker sterling and a stronger euro, does that actually help the UK, or does that help the European Union? My suggestion would be it would help the UK initially, but what I can see is that I expect what we'll see is there are elements of let's say fiscal and monetary policy employed by the ECB that will perhaps be utilized to try and manipulate that currency to effectively weaken the euro against the sterling for whatever trade deal comes forward. But as I said, if we go here, I'm just going to zoom back in here. Is what we can see here is what we're looking at here is after the kind of COVID crash, well, that really price. If I look at the moment, I look at that as price has actually just been in an even tighter block between about 89 and 93. That's what I'd be looking at there. Okay, since we started to get into the negotiations about through the transition deal, the trade deal, we're in that kind of 89 to 93. I wonder if I can put in another kind of rectangle here. There we go. And that's what we're saying is that's what we're in there. And we hopefully, apart from having a kind of a little bit of a flag pattern, price has just literally been for the last sort of 7 months or so, price has just been really in that block. Okay, and so if you're a swing trader, it's quite difficult to trade. Okay, and I wouldn't be suggesting try to swing trade the euro sterling at the moment, because of we are waiting. Everybody's sat on the side, and as I said, a little bit of news announcement makes it swing back and forth. My own particular view is that they have to wait to the 31st of December to see if there is an announcement of a full deal, a basic deal, or no deal. And once that happens, well, then you would want to see how those markets react. If there is no deal, I can see the euro strengthening more, okay, and the sterling weakening, okay, so that might push it up. Maybe we'll get pushed towards parity there, okay, which is what people have talked about in terms of the rate, should that happen. If there is a great deal, will that mean that the sterling gets a bump, okay, and the euro starts to weaken? That would probably appeal more to the Europeans anyway, for the reasons we've just said. They export more to the UK than we do to Europe, so that would actually suit them better. So what I'd be saying is, certainly, for the next sort of, let's say, 10 days, you're going to be sat on your hands there, trying to predict what might actually occur is probably a bit of I think it's probably a bit dangerous, because it could flip and change. And also these markets will be a little bit thinner. Remember, we're going into the kind of Christmas period. Everyone's had a really full-on year. Okay, everyone's a bit bored. Everyone's a bit tired, a bit fed up. All right, okay. And COVID is taking its toll in that sense. And people will probably be just waiting to sort of be thin. Okay, hold the positions, wait to see what, if any, announcement is done, and then take it from there. Now, it might be that there might be an announcement before Christmas, because it's politicians, isn't it? Politicians want to go home and spend their Christmas with their families and have a nice little, rosy feeling that they've achieved something. So, it wouldn't surprise me if there was some sort of announcement in the next 2 days or so, running up to Christmas, before everyone clears off. Okay, politicians, they don't particularly like working at the best of times, do they? So they're not going to want to work over Christmas and New Year. They'd far sooner have it all squared up so they can clear off back to their chateaus or to their country homes and stuff, and be able to sit around and enjoy their Christmas meal with their immediate family because of COVID rules. So don't be surprised if we see that, but keep an eye on this euro sterling to see what will happen, and that will give you an indication of what we see happening. We can also have a look at let's have a look at the kind of the DAX here. The DAX is the main it's the main index for Europe. You could look at the Euro stocks, but in particular, the DAX is sort of the kind of the leading, the leading light, so to speak. And what we can see is that, if we look at, after the COVID crash, price rallied back up there, but really for the last few months, it's not. When you compare it to certainly to the American. Okay, to the American indexes, the DAX hasn't been as exciting, okay, as certainly those American indices. Yes, it's been grinding its way, okay, it's been grinding its way up to the kind of the recent highs, but once again, if you're a swing trader trying to swing this, okay, in kind of weekly and daily charts, it's not necessarily been terribly easy. And part of this is, an element of, if that deal is done, that will have a huge impact, okay, on those German car manufacturers and other German companies, okay, that exports, lots of manufacturing into the UK, and I can see that if there is a deal done, that might be what it takes, okay, to push the DAX to new highs, and that's what I'd be looking at, okay. If there is a deal of some sort, I could see that being very positive, okay, for the European indices, okay, and that pushing the DAX to new highs. So maybe that will push it towards 14,000, okay. So that's what I'd be looking at. But once again, I'm not trying to preempt it, okay. What I'm liking to do is to see, let the announcement come out and see, like most elements, and you see how the market reacts to it. Not surprisingly, if there is no deal, I think that would be a hit. There would be a hit on the DAX because of the nature to the manufacturing companies. In terms of the FTSE, if we have a little look at here, so this is the weekly chart of the FTSE, and in fact, let's because I appreciate it. So this is where the announcement came out. Okay, this is where in 2016 Brexit was, and it was an inverse head and shoulders, and actually you can see for yourself that actually pushed the FTSE to new highs. Why would that do? Why would it happen? New traders might say, well, the FTSE 100 is not really reflective of the UK economy anymore, because the vast majority of companies that are big global companies, and actually the vast majority of them make their profits and their revenues around the world. So what happened is once effectively the election or the referendum had been passed, that basically meant that the sterling collapsed. It was up at what I remember, I was on the trading floor on the night of the announcement. 1 minute it's at 150, and then the next day it's down at sub 130, down towards 120. Okay, over the next couple of weeks and months. But of course, that meant that as the sterling got weaker, these companies in the FTSE who effectively were making their money globally overseas, okay, that meant that their profit margins were increased because the sterling was particularly weaker. So that had a very positive impact on those share price of those companies. However, as we've come in towards the COVID, and as we've come towards maybe not having a trade deal, you can see that pushed depressed price there back down towards 6,000. And what we've actually been doing is, if I go down to the weekly chart, is once again a little bit like the negotiations is actually just drifting around the 6,000 mark, okay. And this bump here, this bump is not necessarily for because of Brexit. That's actually from the 9th of November when they had the announcement of the vaccine, and that's a bigger story, okay. And that actually Brexit has been knocked down the kind of the news priority list because COVID is a much bigger issue to deal with rather than the UK. And so, yes, we have seen FTSE get up above 6,000, okay, and hold it above there. But a lot of that has been to do with COVID vaccinations. I think if there is no deal, what we will see is we will probably see those shares collapse. Even though there is a collapse in sterling prices, what I think will happen is that there will also be a collapse just in confidence there. And so we will wait to see that. So there you go, ladies and gentlemen. We're kind of run out of time there, as always. I appreciate we've tried to cover a wider range of details there. As I said, I'm not a legal or a international trade specialist, but it was about giving you an opportunity to see where we stand now, what have been the sticking points to work out why there hasn't been a deal so far, and to be able to look at the charts and see what has actually happened and where we might be interested in the next couple of sort of days, weeks, and months. As always, I wish you the very best of success in your own trading. I look forward to seeing you next Monday, the 28th. Okay, there it'll be there's no break for us here at Admiral Markets. And I hope you all have a fantastic holiday week. Okay, whether it's wherever you are in the world, I hope you're safe and well, and get to spend some time with your families. And I'll see you next Monday. Thanks very much, everybody. Take care.